Hello traders, and welcome back to Trade Like Skills channel. Have you always been wondering how I'm making these profits each and every day whenever I'm taking trades or whenever I set zones? The market respects my zones. In this video, we're going to look at how I made 4,000 US dollars trading liquidity. And in this video, we're going to look at how liquidity works, how to spot zones, and how to enter and when to enter, and also where to put your take profits. So make sure you stick around up to the end of this video so that you can even see the screenshots of the trade we took using this strategy. And if you want more content like this, make sure you subscribe, share, and like this video so that you can't miss more videos like this in the coming days.
Want to trade like the pros? Join my free Telegram channel where I reveal the actual trades we've taken, the powerful strategies behind them, and the results that speak for themselves. It's also your direct gateway to my exclusive mentorship and VIP program, where traders are leveling up fast. Don't miss this chance to learn, grow, and win. Tap the link in the bio or description to join free today.
So without wasting much time, let's get started. First of all, we have to understand what liquidity is and where is liquidity. Most of my videos I've been talking about liquidity, but you can't understand that much deeply if you don't make much practice about this. So what you have to do is take much practice of what you see that I'm teaching. And I want to remind you that only these videos can't help you out. You need a clear class with step-by-step things to follow in order to become successful in trading. So let's get started. The first thing that you have to understand is that liquidity is money, and liquidity is your stop losses, mostly retail traders stop losses. So mostly whenever we are trading, we are leaving liquidity behind, and later the market is going to do what? To take that liquidity or to sweep those stop losses, depending on where you're putting your stop losses. So bigger institutions like banks, they are going to take all your stop losses depending on the way you are trading. So why do we trade like banks? We only trade when the banks are entering, and we only trade after liquidity is swept. For example, this is a trade that I took and it made me those profits. So this is what I'm going to show you. Firstly, we're having liquidity here and liquidity here. And which liquidity? This is the sell side liquidity that is being taken out by sellers, and this should be buy side liquidity that can be taken out by buyers at any moment from now. So what am I trying to mean? If someone entered a sell from here, he's leaving stop losses around here. So anytime the market might come for those stop losses. If someone entered from here, market might come for those stop losses to sweep them. And liquidity is what moves the market most of the times. So we can see well that this market is in a downtrending mode, and we are looking for an entry that is going to be helpful to us. So what are we going to look at? Firstly, we are going to look at the direction, the general direction of the market at the moment. This is 15 minutes chart. This is gold. And now we can see that the market was breaking, going to the lower lows. And this is a break of structure here. So you mark that as your break of structure. And this helps you to mark the zones in which you are going to understand where the market is really heading to. So the second thing that you're going to identify here are these wicks that you're seeing here. And these wicks represent liquidity. And when you see these wicks, just know that at any time the market is coming to take liquidity from those zones. Now, the other thing that we're going to look at is imbalance or inefficiency in the market. You can watch my past videos about imbalance and you will see what I mean by this. So here there is imbalance. So those are the first things that we are going to look at in order to take the trade. The first thing is the direction of the market. The second thing is the liquidity. And the third thing is the inefficiency. So we are having a break of structure. Yes, we are having liquidity. We are having each and everything. So not only that break of structure, but we are having another break of structure around here. So you mark it as a break of structure too. Now we know that we're having liquidity here. So where do you think the market is coming back in order to retrace and then drop? First of all, I'm thinking about the whole of this zone. This zone is an active zone for the market to come and drop. But if you want to minimize If you want to minimize your losses or your risk, you can only mark this order block around here, but it would be better if you mark up to this zone. So this can be the whole order block, but to minimize your losses, sometimes the market might come up to this zone. But the only thing we are targeting is the liquidity sweep and the fill of imbalance. If imbalance is filled and liquidity is swept, then what is remaining? To look for the direction. So let's play this out and we see how this market played out. And as I promised, I'll show you the screenshots of this trade that we took.
If you've been jumping from one free strategy to another and still can't find consistency, it's time to change how you learn. I've created an advanced mentorship at skillsfxuniversity.com, built for traders who want real mastery, not recycled content. Inside, I show you exactly how I break down the markets, catch precise entries, and grow consistent results without indicators or guesswork. And here's the game changer. When you join the Profit Accelerator, you get a free $10,000 funded account. When you join the Mastermind Access class, you receive a free $100,000 funded account. No extra fees. This is for serious traders only. Tap the link in my bio or check the description below to get started today. Let's build your breakthrough.
So let's play this out. Now this market starts to move, as you can see, and the market is going high. Now, first of all, the market is going to first sweep this liquidity, but the market has not filled the imbalance or the inefficiency. So I'm not going to take any entry at the moment. The only entry that I'll be taking is after the market has filled the inefficiency. Now let's play this out and we see. Now I want you to look at this. This is all about liquidity, buy-side liquidity and sell-side liquidity that the market is creating at the moment. And as we can see, there is a lot of liquidity that is being created. So what are we waiting for? For the market to sweep all this internal liquidity in order for us to drop. And before that, we have to fill the inefficiency. So let's play this out and we see. The market consolidates for a good time. And this is why you have to be patient enough. And this is what I really teach in my classes. You don't have to just rush into a trade because you're seeing a trade is trying to work out. You have to wait for your zones, or you have to wait for liquidity to be swept, or anything that you understand in your system to be played out in order for you to take a trade. So I know many people are losing because they're impatient in the market, and the other people are losing because they don't know how to trade. So in order to build a full strategy, guys, get to my classes and learn. Get to my classes and learn. Yes, get to my classes and learn, and you understand these things, because I'll make them easy here because they are easy. There is a way that you make things easy and then you trade in an easy way. This is how you can make 100 pips daily in a trade. So let's play this out and we see still if we are feeling that. And good. Now, I think you can see imbalance is filled now, or inefficiency, and liquidity is swept. So this is a good entry from here. Even if the market hasn't reached here, you can still take an entry from here. Why? All that you are looking at is filled. Why? There is no other imbalance around here. The only imbalance we had was here. And this is a strong candlestick after the imbalance is filled. If I can mark it, I think you can see that market came to mitigate this zone. So this zone is mitigated by this candlestick. And this is a good entry now. Now we take our entry from that zone, and then we are shooting down. And where are we looking at? So now here you are risking, these are 20 pips, only 20 pips. And you are looking for what? You are looking for, let's see the recent order block. Now, firstly, you're going to look at these things, the facts that you're going to look at in order to mark your take profits. First fact is one. Number one fact is liquidity sweep. Now we are having a lot of liquidity from here that is moving up. So the market might come, sweep that liquidity and tap into this order block and goes back. So this is our first take profit, and our first take profit is 50 pips. Imagine. Now this is our first take profit. Then our second take profit is around here. Why would I put the second take profit around here? The second profit around here is because this is the recent low where the market changed from to come back to this zone. And then this is a lower zone where the market can also sweep this lower liquidity and then goes back to the higher highs. Why? Because here was a zone that the market can tap in for those ones who trade fair value gaps only or imbalances. So this is what happens. Now this is 70 pips. Imagine you are risking 20 pips for 70 pips. Now what else? What else we are looking at? Another target that we are looking at is this zone. So why this zone? This zone is an order block zone. Anytime the market can come and then tap into this zone and continue up. So we are only looking at those three zones. Now our take profits are around here. So let us play this out. Now you are risking 20 pips to make 110 pips. 110 pips. Now look at this. Let's play this out and we see. And that's how we played the market. And that's how we made profits. So I think you can see how we made profits. What we are looking at was liquidity, imbalance or inefficiency, and the market is direction, which is this break of structure that is showing us where the market is heading to. So the moment you understand liquidity, how liquidity works, then you understand what the market is talking about. And that's what we trade. We don't trade indicators. We don't trade anything like BS, anything that is not working in the market well. We just look at what the market really is communicating to us, and then we go with that. All right, guys, make sure you subscribe to this channel, like, share these videos, and then you can watch more videos that are going to be teaching you day by day how you're going to make trades that are easy each and every day that are going to help you make profits. Just simple like that, and then we made our profits and the day was done.